FedEx is the top trending ticker on Yahoo Finance. Shares are surging this morning after its fourth quarter earnings beat, proving its cost-cutting efforts are working. Now, the shipping giant saying that capital spending declining 16% in fiscal 2024. Its CEO touting, quote, unprecedented results in the current environment. You're looking at gains of just about 13%. We want to bring in Stewart Glickman. He's CFRA's research energy equity analyst joining us now. Stewart, it's great to have you. So I think a lot of this optimism, really what is driving the stock here this morning, has been some of that commentary surrounding FedEx Freight and exactly what that could look like here going forward. What do you think about the potential spinoff there of that business and ultimately what that means for the stock?
Right, Shauna. So, yeah, I think that was interesting news that came out last night that a potential spinoff of FedEx Freight draws a lot of interest because the margins in freight are really quite good compared to FedEx overall. But don't dismiss, I think, also some of the other, I think, positives from the quarter. Revenues did not miss, which is a nice change to see. And to your earlier point, the cost cuts look like they're finally, like the rubber's finally hitting the road there, so to speak. And $1.8 billion of savings in fiscal 24 that just ended with the May quarter, another $2.2 billion coming in fiscal 25. And so the fact that FedEx is delivering on the cost cuts, able to, expand its buyback program, and to your point, possibility for a spinoff, I think makes the stock attractive this morning. And I think that's why you're getting the pre-market bounce.
Transports have been a battered sector over the course of this year thus far. What does this signal about the economy more broadly, at least from the read-through in FedEx's lens?
Right, Brad. So you're right. Transports have struggled. And I think one of the concerns that's affected this space is, volumes, have really struggled to make any kind of traction. In the U.S. business, that continues to be a little bit of the case, where and even FedEx's guidance for next year, revenue growth is only supposed to be low to mid single digit growth, right? So we're not talking about a looming broad macro recovery. I would also point to FedEx's earlier moves from the quarter where they eliminated, for example, 2,000 jobs in Europe, which I think was also indicative of concern that a broader macro recovery, at least in Europe, is not coming around anytime soon, because otherwise, why would you let those folks go? So I do think that the macro picture does look troubled. And so FedEx is doing, for the most part, I think what most companies would do under those circumstances. You cannot count on sort of a broad macro tailwind. So you really focus your efforts on cost cutting. And so far, they've been doing quite well on that front.
So when it comes to the valuation here potentially of FedEx Freight, how much, do you have any idea just how much that business could potentially be worth? You talk about it maybe, or at least in the lens, it seems like for investors right now thinking that this could be a catalyst. What do you think that valuation could look like?
Right. So that's a little bit tricky, but I guess what I would point to is the operating margins in less than truckload freight are generally much better than they are for FedEx as a whole. So, you're getting operating margins probably somewhere in the 20% range for that LTL business. And that compares quite favorably with FedEx Ground or FedEx Express. So I think it's a bit premature to say, to put a sticker price on the value of the company as a whole. But certainly, I think that if you're going to be selling off the LTL business, you're going to be generating a fair amount of operating income from those divested assets, and so that should fetch a decent price.
Stewart Glickman, who's the CFRA research energy equity analyst, tracking all things FedEx, ticker symbol FDX, moving higher, 13.5% here pre-market. Thanks so much, Stewart.
Thank you.